Welcome to Lesson 31, Love Method Lesson 8. Today we learn where multiple time frames meet in one place. Those spots become the strongest support and resistance. Specifically, we'll cover 1. When monthly, weekly, and daily wicks overlap, you can trust the level more. 2. Reading the grain matters more than the exact clock setting. 3. Bitcoin, Apple, S&P 500. Same principle works on every market. See the red and blue lines on this Bitcoin daily chart? When several time frames stack on the same price tends to stall or bounce right there. Drop a comment. Which chart have you checked this idea on? On this weekly chart, the thin tips at the top and bottom of each candle are called wicks or shadows. A wick records how high or how low price traveled during that week. What if the monthly wick, the weekly wick, and the daily wick all touch the same price zone? That means short candles, daily, hourly, through long candles, weekly, monthly, all reacted at that same spot. That's a very strong signal. From short-term traders to long-horizon investors, everyone is watching that level as a boundary. So the zone isn't just ordinary support or resistance. It behaves like a thick wall. That's the strong level we're looking for. Check it yourself on the screen right now. Now we've narrowed the same Bitcoin chart down to the daily. That's what you're looking at. See it? The red line is support holding from below. The blue line is resistance capping from above. It's where the weekly level and the daily level overlap. At those stacked spots, candles tend to bounce or get held. You'll see this pattern often on live charts because several time frames are meeting in one place. When multiple time frames point to the same level in one voice, price's reaction gets much stronger. Confirm the pattern on your screen right now. Now we jump to a completely different market. This screen is a U.S. stock, Apple on the daily. Same story as crypto. The red line holds from below. The blue line blocks from above. The chart's colors may differ, but the roles are identical. Check it on the screen yourself. Bitcoin, Apple, crude oil, change the market or the ticker, and the principle still holds. When wicks from multiple time frames overlap, the level matters. That's called universality, and it's this method's biggest edge. The same logic applies to any chart, Bitcoin, 더 나스닥, 오르 더 S&P 500. Now, for the most extreme proof. Almost nobody uses a 777-minute chart in real trading, and that's exactly what's on screen. Even on this non-standard chart, the rules still work cleanly. Watch. The red line acts as support, the blue line as resistance. You can verify it right on screen. So what does that mean? Not you must use this exact time frame, but reading the grain, the support and resistance you can see on that chart, is the real skill. You don't have to name the time frame correctly. You have to read whether this level is strong. That's the real core of this lesson. When you stack time frames, order matters. Read the monthly first. It took longer to form, so that trend is hardest to break. Then the weekly, then the daily. The strongest signal is when all three point the same way. But what if monthly and weekly point up while only the daily points down? That's a conflict, mixed signals. What do you do in a conflict? Simple, you wait. Waiting until the conflict clears and the signals align is usually the smartest move. Forcing an entry is like diving into a pool before you build it. Remember, waiting is also a trading decision. Next, Lesson 32 covers risk-reward. How far is the target from here? Lesson 31 wrap-up. 1. Monthly, weekly, and daily wicks must stack on one level for strong support and resistance. 2. The core is reading the grain, overlapping support and resistance, not a specific clock setting. 3. Bitcoin, Apple, any chart same principle applies. And the most important live tip, when the monthly and the daily disagree, waiting until the signals align is generally the safest path. Lesson 32 teaches risk-reward, how far the target sits from here. Once you have that, you can properly judge the distance between support and resistance. If today's lesson helped, hit like and subscribe. We'll be back with more chart lessons. This lesson is for education only, not investment advice. Every trading decision and its outcomes are your own responsibility.